doing today? This is Mark, your money plan coach, and I'm so excited you decided to spend just a little bit of time investing in the Harvest Plan. It's a program that can save you just hours and hours of time, thousands and thousands of dollars, and it just requires you to put just a little bit of effort into it. That's it. We built this for the common person to make finances simpler, more understandable. Through it, you're going to gain clarity, understanding, confidence, financial inspiration, hope. Everything you would want out of your finances is going to give you tons of opportunity to save hours of time, as we said, thousands of dollars, and overall it's going to give you just the financial peace and confidence that you want to have in your financial life. So we're really excited to get going on this. Just a couple words real quick. This video is built to be fast, just like everything, because you can stop it and start it at your own pace. So if we go too fast, just know we're trying to save you time, knowing that you have control over stopping and starting it whenever you want, so you can get the information you need, spend more time on one thing and less on others. Secondly, if you haven't already, we really highly suggest that go to the home page, click the pricing plans, and choose to download, especially if you can, the gold membership plan, so that right when you're done with this tutorial video, or even while you're going through it, you can maybe double screen or split screen the program and be able to just input stuff right as we are, and in no time flat you're going to see how easy it is to have a financial plan and manipulate it according to your own needs, and you'll never look back. If you do this, all you got to do is fill out your information here. It's a free trial, so there's no cost to get it started. Again, we recommend that you do this right away. And also, if you do have a special coupon code, you can put it in right here under enter coupon code at the bottom of this screen. But again, not necessary. We suggest you do it. It'll make life easier, and you'll be done before you know it. But in the meantime, we're just going to get started and log in. This is where you log in whenever you come to use the Harvest Plan for yourself, and just put in your username, which is usually your email, and your password, which you'll see you can change once you get inside the program. Under this, all you have to do is go into this About Us program, and or this About Us area, and you'll see a Customer Center right here once you're logged in. But again, we're just going to get started right away and show you how fast and easy it is to create a complete financial composite that is just going to be so valuable for you. All you have to do really is fill in the white spaces. So let's say this is George Bailey. We're going to give him a birthday, and let's say his wife is Mary, just like the movie. If you know which movie I'm talking about, It's a Wonderful Life, and he's got some kids. I'm just putting in sample information here. In the white spaces, all the gray stuff is going to calculate for you, and you can see on every page you'll see an add and a save button. After you put information in, all you got to do is click save, and everything will be saved in there, and slowly but surely your information is going to be cross-calculating and integrating with all these other pages in the Harvest Plan's Money Decoder program. So once George is in here, click add to add some income for George. Everything works pretty much on a monthly basis. You're going to put your income in there, and you're going to put in, and this, by the way, is your gross big number income per month. So if it's $100,000, that's about $8,000 a month. It's $100,000 a year, plus whatever bonus you get. And here you're going to put in whatever is being deducted from your paycheck in 401ks dollars, or 403bs, or any other contribution plan you're making per month. So your deductions per month, and here for the 401k, it's going to be whatever amount is being contributed or matched by your employer. That's what goes there. You're going to put your hours per week, and that's going to include travel time, anything else that you need to put in for your weekly hours. Here's going to be your how many weeks per year that you work. So if you have vacations on a 52-week year and you have 4 weeks off and vacations and holidays and so forth, maybe put 48 weeks there. And ultimately, that's all you have to do for this first page. You can see it only takes a minute. That's it. And you're going to be amazed how quick and easy this tool is for you to use and start understanding exactly where you are financially. I'm going to put some information in for the wife. In this case, Mary. We'll say she also has a 401k, maybe a much higher match. And let's say that she's working, maybe she has more vacation time, maybe she's a teacher. So we'll say maybe only 40 weeks per year. And I'm sorry, also let's say the same 50 hours a week, but maybe only 40 weeks per year. And now what we have on this first page is all the income for the family. This net investment cash flow will show up once I go to this next page, which is the real estate, mortgage, and business page. But that's all we need for page 1. We're basically putting in the family information of all the dependents or anyone who's contributing income. We're putting down their gross income here, their bonus, deductions for items that they're paying for, that you're paying for out of your paycheck. Again, all on a monthly basis. And then any matching that's also being contributed by any of your employers. You can add as many income sources as you want here. And click Save. And you have total family income here. And we go to the next tab. That's all we have to do. We're going to keep going here just to give you a feel for how the whole program works and how fast you can have a complete financial plan. Here, if we own a home, we're going to put whatever information we need to put in here. So we know which home we're talking about. We're not going to put 123 Main Street or any addresses or private information. This is a stealthy program. It's built to be that way. Let's say it's worth $750,000. The mortgage balance will say is $500,000. Again, monthly payments. Monthly, we'll just say this is $3,000 a month, and the rate is 4%. Property taxes on that we'll say are $600 a month. Homeowners insurance will say is $100. Say there's a $50 a month HOA fee. Since we don't rent and it's not an investment property, we're not going to put anything there, but we'll say that we're paying $100 for repairs, for flowers, decor, other stuff like that. This warning message that came up is just telling me that I have to put something in this leftmost column or the information for that row will not save. So if I ever want to delete this row, I'm just going to delete this information, and this whole row of information will go away. But right now I'm going to keep this in here, and you can see we know exactly when our mortgage is going to be paid off. We know how much our home is costing us to live in that place. And I'm going to put 1 or 2 more items in here. Let's say that we have an investment property. Here we can name it whatever we want. If we got 5, we might name it by street name or something, again, not identifiable. And if it's an investment property, I'm going to just choose investment. We'll say that that's a $500,000 house. There's a loan on it. Let's say we're paying $2,000 a month, and we'll say that's 5%. Usually investment properties have a little bit more expense to them, a little higher interest rate, that is. We'll say property taxes are $250 a month. We'll say the homeowner's insurance is $50. No HOA fees. And this is what we would put in for whatever rent we're getting from the property. So let's say we get $2,000 in rent, and this on an investment property, this monthly repairs, we'll say any other expenses that are not mentioned here on this property. So let's say maybe there's a property manager, a landscaper, annual repairs, other stuff like that. Let's say it amounts to maybe $300 a month. That's all you have to do for each investment property that you have. You put in the property value, the balance, the mortgage payment, principal, and interest. That's what this mortgage payment is. The taxes and insurance are calculated over here, and there's reasons we do that. And look at some of the information we already have in just a couple minutes here. How long till our properties are paid off? We know exactly how much equity we have in all of our owner-occupied properties. We know how much equity we have in all our business properties. We know what the loan-to-value is. We know what the cash flow is for all the investment properties, the cash flow for where we're living. Again, this is what helps us make really good decisions. We're going to move forward though, because this is really just built to kind of give you a feel for how to put in your information and have a complete financial composite, complete financial plan, whatever you want to call it, in no time flat. So here we're in the credit information. If you have no credit cards, you don't have to put anything in at all. If you do, put in what you can, what you know. You can add as many rows. Let's say that's a Visa, that's a MasterCard. Let's say the payment here is $300 and the rate is 18. Put in American Express. and we'll say that's 15,000 owed. The payment's 400 a month. Maybe the rate's 20%. Let's put one more in. Let's say we have student loans, and we can consolidate them all if we want to, or we can put each one, which is what we recommend really. Let's say we have a $20,000 student loan in this case, $200 payment, maybe 6% rate. The other thing we're going to do here, and you'll find out why later, is we're going to put in what the absolute minimum payment might be. This is the payment that you're paying per month, what you are paying per month, the plan payment per month. This here is the minimum required payment from each lender. We'll say that's 300, and let's say our minimum student loan is 150. We're going to save the information, and it's going to tell us how much months are remaining on each debt, how many payments total are remaining, and each one is going to calculate this cost of payment figure, and it's going to give us our totals for the whole amounts overall underneath here. And we explain these in other videos. On every page you see this movie camera icon here, and that's what's going to lead you to more videos. It's going to help you understand how to manipulate each and every area of your finances. Right now we're just going to keep moving on and plugging in information. Let's say we have a bank account here. This is your liquid asset page. If you have hard assets, again, your vehicles, your mortgages, your businesses, your real estate, that goes there. But liquid assets are going to go here, and that might also include things like gold and silver if you have that. And we're going to choose a purpose for every account that we have. So in this case, we'll just say, well, let's call this a 401k. Let's say we have 401k George, and we'll say that there's $100,000 in there right now. And let's say George is putting in, we know what he's putting in here. We already put it right over here. We'll say that he's putting in $400 per month into his 401k. And let's say he's earning return on investment. Let's say he thinks he's going to earn 8%. You can ask your investment advisor what he thinks you should earn long term on each of your investments. We'll teach you more about that in future tutorials. Let's put in a few more accounts. If we have a match, we're going to put that in separately. We're not going to put a present value in here. We're going to put just a blank, a zero right here, and we're going to put whatever the match is. In this case, George has $200 matching from his company. We'll say that he's earning the same. We'll say that Mary has a 401k too. And all this we're choosing is retirement for now. We'll go into more choices at a future time. We'll say Mary's got 150 in her account, and I think we said that she's putting 500 a month in. We'll say she's earning the same amount. Let's say she also has a match, which I think we already said that at the beginning. And we'll say she's earning the same amount here. We click save, and again, in no time flat, not only do we have at least this information, but hopefully you put in any other Roth IRAs, bank accounts, brokerage accounts, whatever. And again, just make sure you choose, is this retirement money, emergency money, college money, or other? What is the purpose of each account? It's really important when you do financial planning to know this. But in the meantime, we're going to put in a retirement age for George. So let's say George, who is in this case the head of household, and it could be flipped, it could be Mary's head of household, it doesn't matter, whatever you want to do, but whatever the head of household's date of birth is going to help us understand how this works. But let's say George wants to retire, or he thinks he wants to retire at age 65. He's going to assume a 3% inflation. You might think 2, you might think 4, whatever you want to put in here, you can put in, and he's going to assume maybe he's going to continue earning about 8% in his retirement accounts. So here's what that's going to tell us based on this age. And you can change it to 60, 70, 68, whatever you want. Doesn't matter. This is a tool for you to use. It's going to tell you, though, for each account that you've entered over here, it's going to tell you how much value you're going to have in that account. It's going to tell you how much income you can pull out of that account. It's going to add all that together so you know what your full retirement income is going to be based on all of these accounts, and that's based on this information here. And it's also based on you never having to go broke, meaning your accounts will always be enough to earn the amount here. And your balance will slowly go up every year based on this inflation factor. We're also going to put in if we have a pension, a teacher retirement, police or government pension, or Social Security. put it right here. This is your fixed income retirement options. Let's say Mary's a teacher, which we said earlier. Let's say she has a pretty good annual pension. So again, we put that in, and now not only do we know what the retirement liquidity savings will yield George and Mary in their retirement years, but we also know what their fixed retirement income will be added together. That's their retirement income, and it's all green here. Why? Because their monthly budget, which we really haven't done yet, but we will, is close to zero because we just haven't completed that yet. But this is kind of going to tell us whether we're in position that we want to be in or whether we need to make some changes. This form also tells us when we're going to be debt-free for our real estate, our unsecured debt, our investment real estate, and our vehicles. And it's even going to say if we want to put in an estimated amount that we think our owner-occupied properties or investment properties are going to grow per year, we can put a factor in here, return on investment factor or a growth factor for that real estate, and it's going to tell us what the loan balance is going to be at that time. It's going to tell us what the property value is going to be, what our net equity is going to be, and at the bottom it's going to tell us what our retirement income is going to be, what our assets are going to be at retirement, what our net assets are going to be at retirement after the loans are all paid off, and so forth. It gives us just a ton of information. Again, there's that movie camera to show you more video tutorials, but in the meantime, this video is really about just showing you how easy it is to get this information in here. Again, you just put in the whites. We're going to say we have a 2010 Honda, and the insurance premiums are $60 a month for that car. Bodily injury for our insurance is $100,000. Let's say property damage coverage is $5,000. Deductible, let's say, is $1,000, and comprehensive deductible is $250. We can put in our agent information here if we want. Let's say we have a second car, and it's a 2015 Toyota. Let's put in an American car, Chevy, and let's say the premiums on that are $50. We'll say we have the same coverage. Again, you can see how easy that is, and again, you can put in the name of the driver, the license number. This is just reference information here, which makes it easy because you can access this on your cell phone. And when you're out and about, if you ever need it, you'll have all the information you ever need on all your finances in this program. We're going to say that, so after we click save here, you can see these vehicles carried down here. So we're going to put in the monthly gasoline. We'll say we're paying $100 a month there. Tires, brakes, all our monthly maintenance, let's say $50 a month. Let's say the vehicle's worth $5,000 because it's kind of old, 2010 at this point. We'll say it's paid off. Let's say we're paying $100 on the Chevy. Similar monthly maintenance, maybe a little less because it's a newer car. Who knows? Maybe it's worth a little more because it's newer, but maybe we have a loan balance. So if we have a loan balance, we're going to come down here and say that yes, this one has a loan. That's fine, $10,000. We'll say our payment's $400 a month, and the rate's 2.5%. Save. We're going to save everything. If we want to put in our miles per gallon, that will give us some other information. We can put in the odometer reading for the last time we got tires and oil changes, just for quick reference. Again, just like this insurance, for quick reference, you always have it at your disposal. And that's it for the vehicle page. And you'll see this is all going to add into our overall budget. Here we're just going to put in our home insurance information. Let's say it's $80 a month. Let's say our deductible on our homeowners insurance is $2,500. I think the house was $750. So let's say we have $500,000 coverage. Maybe we have an extended replacement cost percentage. We explain that also in future videos, but right now we just want to put something in here to show you how quick and easy it is to complete this process. Let's say our personal liability, that's if there's a slip and fall or dog bites. Let's say that's $100,000, and let's say we attach it to the home property that we put in here. That's all we really need to put in there. And then we're going to move on to life insurance. And again, we're going to circle back to all these eventually. And if you do become involved in our program, you're going to be able to manipulate all this information. We've got George and Mary already in here, it looks like, because their names are in there. If not, Just choose who has the life insurance, who is the beneficiary, what kind of policy it is, the monthly premium. We're not going to talk in this video again about types of insurance, but we do in other types. Let's say it expires, the premium expires 1/1/2025. There's no cash value because it's a term policy. And we'll just say that Mary has a similar policy. All right, $1 million, 1/1/2026. 1/1/2026. There we go. That's a little hard. There we go. Disability coverage or long-term care. We'll go down here. And again, just like every other page, we click save, and it's going to give us tons of information, including how much this $1 million coverage in this case would generate an income for the beneficiary of the policy. If it's 1.5 million, here's how much income would be generated. And this is calculated based on the information that we put in on the assets and retirement page, which is, I'm going to go back to that just so you can see it. Assets right here. Remember what our estimated inflation is and what we think we could earn long term once we're retired or dependent on a lump sum source of income. So that's how this is calculating right here. If we change this number over here, let's say we think we can get 10%, or let's go the other direction, 6%. It's going to change all these values because these are calculated based on what we think we're going to earn long term, as well as it's going to change our life insurance earnings values here. At the bottom, again, we go into this on another video, but we have tons of great information. It's going to help you understand exactly what policy you should have, how much you should have, why you should have it, and so forth. We train you on all these sorts of things. But right now, we're just teaching you how to get information in here and have the general composite ready. So your monthly premium on your medical insurance, maybe everything's paid on George's policy through his company. Maybe Mary and George both have a separate one. Doesn't matter. It's whatever you have is what you put in here. A lot of families have one medical insurance from one employer. That's what you're going to want to put in here, and you can put in all your different coverages here. Instead of calling your insurance company every time there's a slip or fall, if you just call them once, or you look in your policy and you say, okay, what's covered? What am I covered for? How much are office visits if I go see a doctor? How much are professional services or hospital visits or well checkup visits? Put it in here one time. You have it at your disposal all the time. And we're almost done already with a complete financial picture and plan. The last thing we're going to do is this decisions page, which is very much, of course, like a budget. And all we have to do here is put in our monthly figures. In this case, our federal taxes is basically how much taxes you pay per year in federal taxes. And that you've got to get off your tax return. You can ask your tax advisor, but you don't get that off your pay stub. That's how much you're putting in for taxes that will be owed at the end of the year. Your actual tax amount shows up on your tax return. It gets reduced by how much you've already put into the system through your paycheck or through quarterly payments if you're self-employed, and then you get a refund or you owe extra. But the actual federal taxes that you pay per year, let's say it's $24,000, that would be $2,000 a month. And let's say you pay state taxes, because you don't get to live in a state like Florida, Texas, Oregon, Washington, and a couple others where there's no state taxes. So if you have state taxes, let's say you're paying another $12,000 per year, which would be $1,000 per month. If you do tithing through your church and you want to put your number in there, great. If you don't, you just want to call it charity, there's another area here. You can put it wherever you want. The reason there's two spots for this number is because some people feel that this is an obligation that they want to do, and it's an important part of the financial plan. Other people just do it when they can and when they feel it's right to do, and it's more of a discretionary expense for them. You can see that this decisions plan is built with a priority level, where your financial plan is priority 1, then your essentials, home and real estate, vehicle, and then discretionary. So if you ever have financial tightness, this is the area you would take your hardest look at. And we have a lot of ways to help you with this whole budgeting thing in ways that no one else has ever shown you. And you can even see this layout is probably different than anything you've ever seen before. But all you have to do right now is put your best estimate of what you're paying per month for each of these items. You can see it really doesn't take long. I know most people don't have a lot of doctor and dentist trips. This natural gas is not gasoline for a car, but your gas for your stoves and heaters and stuff like that. This is your electricity per month, water bill. I'm just going to fill it out so you can see how quick and easy it is. Grooming, this is hair, nails, makeup, all that sort of stuff. Again, per month, all of this is per month. If you pay for private school, you can put that in here. If you rent and you didn't put anything, we're going to save this for now. If you didn't put anything in the real estate section as a renter, let's say you don't own a property and you rent wherever you're living, and you did not add an item and say rent there, which would have given you would have put this number in here, let's say $2,000 monthly rent. If you did this, you say you rent and you're not an owner occupant in this real estate section, then on this decision page, and you can do it either way, it doesn't really matter in that case. On this decision page, you can see the rent there. You're going to want to put something in here if it doesn't show up over here. So housekeeping, 50, we'll say. Gardener, we'll leave that alone. TV and internet, let's say that's 100. Let's say the telephone is 100 a month. Let's say we've got most of our vehicle expenses already in here from what we entered here on vehicle. As a matter of fact, you can see all these expenses are in here already from our home entries. All these expenses, everything that's gray or shaded in color are already put in, so we don't have to put those in again. But let's say we spend some money dining out per month. We spend some money on entertainment per month for who knows what, movies, concerts, games. Vacations is a good thing to add up annually, because some people take a big trip every 3 years. If that's the case, maybe divide that by 3. Some people do just weekend vacations or staycations, but you spend more. So just try to figure out what you spend annually. Let's say $2,400 a year would be $200 a month for vacations. Then there's those American sports and clubs. Again, if you have extra charity that you didn't put in over here under tithing and charity, birthdays, mom, dad, brother, sister, kids, nephews, kids, friends. Make sure you put in an amount for everyone, a monthly amount that you're really probably paying. If you have pets, you can put that in here. One thing I failed to mention, this dining out figure. This is all the food that you eat, Starbucks, McDonald's, ice cream, whatever, that doesn't come through your grocery expense. When you go to buy food at the groceries, any additional expense that goes here for food. And then holidays, Christmas, Hanukkah, Halloween, Thanksgiving, Valentine's Day, anniversaries. We spend a lot of money here in the States on holidays. So let's say it's $3,000 a year. Let's put in $250 a month, and then then we're going to click save, and that's it. You've got a complete financial composite, and you'll see if you start working with these camera icons here. These are going to bring you to tutorials that's going to show you more in depth how to manipulate and work on each of these sections, depending on the section that's most important to you, or depending on these areas that light up as yellow. For example, when we were in the asset page here, you'll remember this area in the bottom right was green. Well, guess what? Now it's yellow. So there's areas here that are going to light up as yellow that are going to help you, especially on this dashboard here. You can see some yellow areas. We're going to share more about how to utilize those and how to get more out of your financial plan and make sure that you're where you want to be in the future, and show you how to make life really simple, easy, and understandable. But this is a complete financial planning calculator. We're going to go through some of these other, what we call advanced tabs later, but right now, if you just did that, you're set. You've got the basis all set up for your financial plan, and it's all going to be really easy from this point forward. I promise you, it's going to make your life really clear, your financial life. It's going to be clear. You're going to understand things. You're going to be thought out. You will save thousands, if not tens of thousands of dollars just by tweaking information. I promise you, you just got to stay with the plan and follow our little tutorials, which are tutorials utilizing this tool here. So thanks for spending the time. You know what it's all about now, or at least part of it. Just giving you a little glimpse. Fill it out for yourself. We look forward to working with you in the future. And congratulations if you made it all the way through. You're on your way to saving thousands of dollars and having more peace, power, independence, and prosperity in your finances. So it was great working with you today, and I look forward to the next time we get a chance to talk. Okay, have a great day.